Hi, it's Lee, and welcome to the Tesla Economist. Delivery and production numbers are just around the corner, and will be told in a few days. A lot of people think that this is the most important delivery numbers Tesla have ever released. However, there have been many others in the past that have felt like the whole company is riding on a good number. Particularly back when Tesla were trying to produce the Model 3, and as investors, we were finding out just how hard it is to scale up to mass produce an electric vehicle. But luckily enough, Tesla pulled through and achieved the first ever volume produced EV in the world. Although the stock price actually didn't start to jump until later. I'm not entirely sure Wall Street does understand just how important some Tesla milestones really are. For example, if Tesla suddenly announced that they were at a rate of 10,000 vehicles a week for 4680 production, the market might like that a bit, perhaps so much so that the stock shoots up 10%. But do you really think the market would reward it much more than that? If 4680s hit high volume production and look scalable, then that's it. This is up there with FSD being solved and meeting regulation. This is the cell that can mass scale EVs at lower cost. Major breakthrough. And something I've been waiting for since we were first introduced to the 4680 cell. Anyway, I digress. So the build up for these delivery numbers appears to be starting already, with the stock up over 6% today, and broken well through $200 finally. And it feels like it's the start of the run. There are rumours that we're looking at around 425,000 vehicles for the quarter, most bulls thinking more around 430, and analysts around 420,000. Some are even suggesting the possibility of 450,000, which is just that, a possibility. There are enough cars. It really is only the delivery numbers that we are concerned about with this quarter. We know how many units Tesla are producing in their factories, and what their capacities are, and current growth. So production is not really important. Whereas in the past, we knew Tesla could sell every vehicle because they had long waiting lists. But now the waiting time has dwindled. We have discovered that Tesla are capable of making a lot more electric vehicles. Next, the world is wondering, can they also sell that many? Especially during such uncertain economic times. This uncertainty has been mitigated by Tesla by lowering the prices of all their vehicles in pretty much every market. Hence, which brings us to the reason why this could be the most important deliveries number yet. In fact, it definitely is, as pretty much up to this time, it's been the production numbers we've been watching. We've been concerned about Tesla increasing supply, but now it's time to watch to see if Tesla can increase demand from the previous quarter. Q4 was again Tesla's record sales quarter, but this was achieved by lowering the prices at the end of the quarter and offering other various incentives to take your Tesla before the end of the quarter, particularly in the US, as most customers were aware that they just had to wait until January and then they were going to get the $7,500 tax credit, which almost any rational consumer would be willing to wait that short period to save such a large amount of money. Incentives were given in China and Europe too, and deliveries didn't come in as high as they were expected to by the Tesla bulls. Q1 is usually a much quieter month for auto sales than Q4, tending to be the highest quarter of the year. Historically though, Tesla deliveries have still done better in Q1 than the previous Q4 over the last couple of years. This will be the quarter where we discover whether Tesla has unlimited demand. Well, actually, we'll discover the limit of Tesla's demand. Tesla had bloated margins prior to this, but they have now cut them down by about a half to these new price points. And they are still highly profitable. We just need to know this number now. Have Tesla found their marketing clearing price, where the demand meets their new level of supply in this economy? How popular is the Model 3 and Model Y at these times? This is the big question. In fact, this is the cliche question. This is the epitome of the bear thesis that there is not enough demand for Tesla, still now. This is fundamentally based on the premise of the competition are here, and they are. Yet last quarter, Tesla still reported record deliveries. And we do continual competitive analysis for Tesla, and I'd like to assure you, by no means the competition are here, There is no car like a Tesla. And sure, yeah, there may be a few EVs that subjectively look more modern or nicer than a Tesla, but imagine if BlackBerry released some models that had a more modern looking design than an iPhone back in 2010 or so. Does it really matter? The BlackBerry still had buttons. Ironically, just like all those legacy EVs still. Tesla is still making the most advanced EVs, whether you like them or not. So, no competition, just more varieties of style and lifestyle from the competition, which is more important to some people than others. Yet these latest designed EVs are only selling in the thousands at most per month. And in a few years' time, they'll also look dated, possibly more than Tesla, as Tesla chose a more timeless design compared to what may have been in fashion that hour. And then what? Will Legacy keep updating their EV models every necessary season, put in more dollars in R&D and new manufacturing to make another EV in low quantity that loses lots of money? Or is it BYD in China that is the real threat? My thoughts are that is unlikely, but there are plenty of contrarian opinions against mine in regards to BYD. But this is the narrative from the bears. Personally, I think the overall aggregate demand for autos is down due to where we are in the economy and the fact that interest rates are so high. So yes, demand was down for autos, not just Tesla. On top of that, supply is up for Tesla. And if we have more supply, then prices need to come down. And if we have less demand, prices need to come down. So a double reason as to why Tesla's prices were too high, and hence we saw such dramatic price cuts across the board. And now the question on everyone's mind was this price cut dramatic enough? Will Tesla's demand be closer to the production numbers? Does Tesla have a chance of selling 1.8 million units this year, or possibly even 2 million? Big questions, and soon to be answered. Although a lot of Wall Street has already moved on and is focusing on Q2 already. You see, even if Tesla score well in deliveries this quarter, then we don't know how well they'll do next quarter. And it is possible a lot of consumers only purchased a Tesla this quarter because of the price cuts. And next quarter, there'll hopefully not be price cuts. Was Q1 a one-off quarter catching consumers who are waiting for a lower cost Tesla? Or will this be a continual pace of demand? Well, Q4 also saw price cuts too, with strong incentives to order before the end of the year. So you could say that Q4 actually did take out a lot of that pent-up demand too. Personally, I think it's pretty obvious deliveries will be between 420 and 430,000. Anything outside of that range will make the stock move one way or the inevitable other. There's nothing wrong with these numbers at all, but Tesla will need to do something to get to that 1.8 million for the year. The Cybertruck won't be enough. Ramping up the new factories will get production high enough, but then it will come down to demand. And like we always say, Tesla could start advertising, which always seems to be quite an unpopular suggestion, but it's still true. Once we know deliveries, then the next item on the agenda is earnings report. And the most important number in that moves the stock is the margin. What is Tesla's gross margin for vehicles going to be? They just had a massive price cut, and 100% of the price drop came out of margins. So the big question is, how much profit is left? We're told that margins should still be above 20%, which would be very good, especially at this rate of production. Then the next most important element is the ASP. What is the average selling price of a Tesla? Again, obviously price cuts affected ASP. So how much are people still paying for a Tesla? Really though, this year is a bit of a non-event in a lot of ways, and these delivery numbers are just a bit of noise. We just want to make sure Tesla start building Mexico, launch Cybertruck, and show some consistent improvements with 4680 scaling. These delivery numbers are going to be more macro-based really, to do with the aggregate auto demand, which is a cyclical industry. If it was still boom times, then Tesla would go back to having long waiting lists. During the down times, they cut costs and margins. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.